Lessons to learn and live by. Oh man, what a week we had last week. Alts get annihilated, blue chips get battered, and look at Bitcoin rising back up to the range. Hey guys, it's Keith Allen. Pretty bloody Friday, needless to say. Hope you endured the weekend and got through it without too much pain. A lot of people just got absolutely annihilated. And I hope that wasn't you, quite frankly. I mean, what are we talking about? 19 billion liquidated? That's just nasty, right? That's like maybe one of the biggest liquidation events ever, if not the biggest. Really, just a nasty situation, and I want to use it as a learning experience. As most of us who have been in this game for any length of time have had our teeth kicked in at least once, if not multiple times. And for me, that's where the greatest lessons have come from. Yes, we can learn about charting and technical analysis and risk management in books and tutorials and videos, but nothing teaches you like the School of Hard Knocks. And I chalk up each and every one of those events as the price of education of being a trader. So I would say if you've been in this game for, I don't know, a couple of years, and you have or less, and you lost money in Friday's nuke, welcome to the School of Hard Knocks. If this is something that's going to harden you. Hopefully, you didn't immediately turn to pointing blame, right? If your first reaction was to blame Trump, blame market makers, come up with conspiracy theories, why you got nuked or liquidated. This game probably isn't for you. I would honestly, I would cash in your chips, whatever you have left, take your money and walk, because you're not cut out for this game. If you were instead introspective, looking at, going back to analyze your trades and look at what you may have done better or done differently next time, congrats. You're on your way to becoming a better, smarter, more disciplined trader. And that's how you grow in this game. So, we could, I'll be honest with you. I was torn on what to discuss today because there's so much, as per usual, so much noise and chatter and ridiculousness on social media. A lot of pointing fingers, a lot of blame. None of that is helpful. And so I wanted to make this more of an educational experience, as I have done in the past, and seems to be something that you guys are responding to. So that's what we're doing today. By the way, if you're new to the stream, welcome. My name is Keith Allen. I am a full-time trader. I'm a work-from-home dad. I'm co-founder of Material Indicators, and I too lost some money on Friday. I didn't get liquidated because I don't use leverage. So I'm okay. Just some normal stop losses. But nobody likes losing money. No one. And it's just, it's the nature of the beast here. So live chat is open. If you've got questions, I'm going to do my best to answer them. And I am glad that some of you are eagerly waiting. Proud noob DXB, start this. I appreciate the enthusiasm. I really appreciate the enthusiasm. And I hope that, you did okay on Friday, proud noob. So let's kind of dive into this, okay? So yes, there was a big tweet on Friday from President Trump saying that, I don't even know if it was a tweet. He doesn't even use that platform on his own on his own platform, whatever. Word got out, right? There was an issue. Apparently a letter came out from China that went to most of the world's nations, basically saying they are going to restrict some essential materials that we need, right? Rare earths, to be precise. And with China being the number one producer of rare earth materials, and they say they're going to withhold, and that is something that would be detrimental to production of many things from phones to cars, batteries, you name it. There is a critical need for rare earth materials, and China issuing that shot over the bow of the rest of the world, saying, "Hey, we're not gonna let you have them." Um, this is borderline antagonizing war, to be honest with you, um, because it's just not something that the world is prepared for. And so, in typical fashion, Trump replies with a tweet that says, "Well, this is just not acceptable, and I'm going to impose another 100% tariff on China, bringing those tariffs up to 130%." Well, how many times have we seen this game? How many times has he said that? How many times has he bluffed some ridiculous number that everybody in the world knows is not sustainable? It can't happen. It won't happen. And of course, today, oh, another tweet from Trump. Everything's going to be fine with China. Don't worry. It's going to be fine. It's ridiculous, right? But nonetheless, the market responds, knee jerk reaction to everything that guy says. So is he the reason you got wrecked? No. He may have been a catalyst, but he's not the reason. The reason you got wrecked is because, well, you're not trading responsibly. Simple as that. Either you're making bad decisions, your also a bad decision is poor risk management. And so those are things that we're going to talk about. Enrique lost 20% of his capital. Painful day. But hey, sorry that happened to you, Enrique. One of the lessons is don't dump. Once we have a flash dump like that, isn't the time to get out, because as you've seen, especially over the weekend, right? And this was something I wrestled with myself. How do you deal with it, right? How do you assess and how do you deal with it? Do you cut your losses because you think there's going to be more, or do you look for some sort of recovery, or do you dollar cost average your way into a recovery? Those are all things that we all contemplate in situations like that. But as you can see, you know what, I tweeted this over the weekend. Somebody asked me what was, you know, what was the Bitcoin chart? This was on like Friday afternoon. What was the Bitcoin chart looking like? Let me see if I can find that. If I can find that tweet, let me go ahead and share a screen. I actually have fire charts up right now, but let's go to X and see. Oh yeah, okay. So here you go. Friday looks like a fuckery, smells like opportunity. Keep that in mind, right? One man's disaster is another man's treasure. So, yes, it was brutal, but that brutality led to opportunities. Bitcoin went down to, what, the 105 range? Um, Coins like Atom, look at this. Atom literally went to zero. Literally went to zero. Now, am I happy about that? No, because I have a very small position of Atom, and the only reason I have any Atom at all, because I do not really focus on altcoins, but I happen to have a very small amount, and now it's an even smaller amount because it is the highest yielding stakeable asset on Coinbase. Okay, so I'm making like 15% on that Atom there. And one of the issues I have with staking is it takes so long to, right? 25 days to get those coins out. So I couldn't do anything if I wanted, right? You're in it. And that's one of the reasons I'm reluctant to stake a whole lot more of anything for that matter, with the exception of ETH, because at this stage I'm playing the long game on ETH. And I personally was stopped out of a little bit of ETH. More than a little bit of ETH. Not happy about that, to be honest with you. But I had those rules in place. I had those stop losses in place, and those were obviously reached. I wish I was a little bit more focused on the charts over the weekend, because I I would have bought more ETH at a better price than I did, because it got down to the 3,800 range, something like that. And I missed that opportunity. So one of the lessons here is, yeah, when it looks bad, when it's the bloodiest, when it's the nastiest, that's when you need to be looking for opportunities. And I was engaged with family activity over the weekend, and so wasn't charting, wasn't trading, and probably would have done myself some good if I had at least, Friday I was waiting for things to cool off, um, and probably would have done best if I had actually traded right in that nastiness. Um, Picked up a little bit more, and I could have dollar cost averaged a little bit more at 'em, um, and and done okay. But I'm kind of done with assets like that, and I'll tell you why. Um, I I initially got into it again because it's a stakeable asset, and it has like a 15% yield on Coinbase. And again, we're talking about a very small position here. Um, and I was chalking that up as diversification. And in full disclosure, I am overweight Bitcoin. And in hindsight, maybe I'm not overweight Bitcoin at all, but I am heavily weighted in Bitcoin. I have, over the past few months, started adding ETH into my long term hold portfolio. And now I have to go pick up a little bit more. Um, and I have a little bit of Solana, which I'm staking. And that's about it. I think, oh, there's some Link. I have some Link, which also got punished. Everything got punished. I mean, let's be frank. Blue chips got punished. Let's look at Coin Market Cap, and you can see just the annihilation that's happening. Literally market wide for the most part, and that's also very well illustrated here in the global analysis chart here on Material Indicators dashboard. Look at this. Positive returns of all alts. Positive returns less than 10%. So 8.7% are in positive returns over the past 2 weeks. And likewise, how many are in double-digit drawdowns? 94% are in double-digit drawdowns. So it is a bloodbath, and that is a sign of opportunity, right? That's when you go look for those opportunities. Now, do you want to mess with altcoins at this point? Um, and I would say that this is evidence why I don't think there will ever be another alt season in the way that we've seen them in the past. Um, there just won't. And I think an event like this might even actually, I hope it kills some alts. I hope they just shrivel up and die, because there is so many. There are thousands of them, tens of thousands of them, with no freaking purpose whatsoever, and it's just literally thinning the liquidity and the concentration of liquidity that should be on other assets. Let's see. Here's November says, I'm reducing my crypto exposure significantly. Thankful for the last rebound. I doubt we see a new all-time this year, if ever. We will see one ever. I guarantee that. There will be a new all-time high for Bitcoin. There will be a new all-time high for ETH. Okay. Whether it happens this year or not, I don't know, but it will happen again. But reducing your crypto exposure. So this is the difference between diversification and diversification. Diversify means, you're going to spread your capital across other assets. And for example, a lot of people who are all in on Bitcoin then go into something like MicroStrategy. That's not diversification. You're doubling down on the same bet. Likewise, diversifying across a basket of shit coins isn't really diversifying, right? You're putting your eggs in a basket of subpar assets, and you could argue, "Hey, I'm in blue chips," and I would say that if you are going to diversify in the crypto space, then yes, that's where you would, that's probably the best place to do it. Some of those blue chips, dropped 20-30% as opposed to 60, 70, 80, 99%, like some of the alts did. And we're seeing quick recoveries, right? And let's just look at what this looks like. Okay, for Bitcoin, number one, look at this. We came down. I've been sharing timescapes with you guys for a long time, and we came through support obviously everything got annihilated, right? So this whole candle here ended up as a 7% dip, but what was the range of it? What was the breadth of the move, if you will? Okay, this whole thing extended 10.5%. That's nothing. That is not a big deal for Bitcoin. And so that's about the best you could hope for on a day like this, right? What I like about what I'm seeing here, I like that one, we have a higher low. Two, we have one, two, three support tests here at this July timescape level. Now there's another one below it, and that has confluence with this 200-day moving average. If we went there, I wouldn't be so surprised, but I wouldn't like seeing a lower low. So over time, this 200-day moving average is going to pull up higher, and hopefully we don't go below this and print a lower low. What you don't want to happen here ultimately is you don't want to lose the yearly open because that really, these indicators are important. This one is even more important. This to me would indicate end of cycle. In terms of what other assets have done, let's look at ETH. And of course, you see the recovery here. What I like about this recovery is that we're now back above the quarterly open, the Q4 open, but we're running into resistance here at the 21-day moving average. That has been a common place for us to have resistance, as you can see. And so we need to clear this and then ultimately get back to the trend line, get back above this first week of this fourth quarter, this 10/6/2025 open, and then we can resume our previously scheduled program, if you will. This doesn't necessarily have to happen this week or this month or even this year. But what you can do is watch and see where price goes, right? If we start losing these levels again, and if we lose this 7-1, which has confluence with the 200-day moving average. And I've had not a lot of you, but I've had a couple of you say, hey, I listen while I'm in the car, I'm driving, I can't look at the chart. Would you mind giving me a reference of the price level? So 107K, which is where I had an order that got filled during this dip. So I'm happy about that. But that is potentially a landing zone if we go back and support test again. But on the way out, right? So if things break down from here, then you can expect us to go sub 100K. And if likewise, if we can get above this 21-day moving average, then we got a great opportunity to go back to the trend line and break back above this 10/6/2025 timescape level, which sits at about 123.5K. And if you do that, then obviously we're back on trajectory for the all-time high. November had another comment. I'll allocate that mostly back to stocks like Tesla, Nvidia, Robinhood. I don't think Wall Street wants Bitcoin to go much higher. Maybe they do, maybe they don't. But the diversification into stocks versus into alts, probably a stronger bet. I think people connected to the Trump administration, Wall Street, in conclusion with the exchanges don't want prices to reach levels where people want to take profits, wrecking leverage in between. Interesting take on things. I think ultimately he does want price to go up, and how fast he wants that to happen, I don't know. But the game is pretty simple, right? They pump it, they dump it, they repeat. And there's no denying that he was the catalyst, right? And I don't even know if he realizes when he's going to be. Sometimes he does. Sometimes it's calculated. I'm not sure this was a calculated move for him because it came very quickly. But nonetheless, is what it is. It came. It went. It's over. Let's look now at ETH. This is one I'm a little I'm not thrilled with this because I did get stopped out of some positions here. Um, and I wish that I had added. I think I had an order um, at 4,000 and maybe one at 3860. But I wish I had got down here and picked something up again here, which unfortunately I didn't. Timing wasn't right for me. Um, Nonetheless, the recovery. This is what's important. You have events like this, right? So number one, we know that the manipulator in chief is full of hot air. He makes these threats about tariffs and then he walks them back, and then we end up somewhere in between. Well, the market had the weekend to think about it, and and largely recovered most of the downside move. So now we're not really that much worse for the wear, to be honest. And if obviously there's some important levels that need to be cleared, but it's coming into focus and it's possible. So now let's move down the line. Litecoin was having a beautiful day. Litecoin was having a fantastic run, coming off of an approval on an ETF, and hit what 135. And this is where I made some bad decisions. I could have and should have. So this was a 61.5% dump for Litecoin, and look how much of it's recovered at this point. Okay, it's now up 89% from that. So unbelievable. I saw this as and this was on me, right? I saw this as you know, if you followed me for a while, I did have some conviction on Litecoin for a while, and then Litecoin just kind of stalled out and wasn't really doing anything. Most of my issues stem from the fact that I liked I liked the fundamentals on Litecoin, but it just seemed that they weren't focused on the mission of what they were actually going to do, or maybe they were focused on it, but they weren't communicating very well the value proposition of what that coin, what that blockchain was all about. And then the marketing, or at least the social media exposure, just turned into memes and bullshit and nothing that really gave us any confidence in the coin. So I was like, you know what? I'm done. I sold. And then of course we see this opportunity to we start seeing things just soar on the ETF news, which I should have known and treated as a buy the rumor, sell the news event. But I wasn't really in tune to the rumor as in tune to the rumor as I should have been. And I felt like, hey, you know what? This thing does seem like it's breaking out, and maybe I'll just add a little back into my portfolio because I think this is a blue chip that could actually, now that there's some institutional backing behind it, it might actually start to move. And of course, the rest is history. It went the other way on me. Good news is it was a very small. It was a small position, and I had room to grow it, which was always my intention. If it pulled back, I would open with an initial order, and then as it pulled back, I would dollar cost average. So I did get a nice DCA on it, and now I just gonna wait to see if it appreciates, and hopefully it does. And at that point, I'm going to make a long, hard decision of whether I just want to get out of this and stick with Bitcoin and ETH, and then just scalp alts, just trade them, scalp them, but not hold anything for any great profits, because the alt season narrative is dead to me. And if this isn't evidence of it, if seeing 96% of alts literally bottom out isn't enough sign for you, I don't know what is. I just don't think it's going to happen again. Simple as that. So, Adam, that was another one I was telling you about. This is the bloodiest thing I've ever seen. Look at this, 99.98% drawdown on this wick. As I've said many times, especially last week, it's not where you start, it's where you finish. So you see a wick come down here. By the way, if you can get an entry like this, zero is any asset, zero is a great entry. Any asset that's not dead or delisted, zero is a great entry. This is remarkable to me. I mean, it snapped back. And why did it flush to zero? Because it's illiquid. It's a thin order book. So people number one are oversizing positions on assets like this. Number two, they're leveraged. And then what do you got? Right? So the first rule I would say, stop using leverage. Stop doing it. Unless you're winning consistently and you're not losing, and through this event, you were protected and did not get completely wiped out. Don't use leverage because you don't know what you're doing. I don't use it. I'll say, yeah, I don't know what I'm doing either when it comes to using leverage. You know why I don't know what I'm doing when it comes to using leverage? Because I don't use it. You are ratcheting up the risk. Straight up. Ratcheting up the risk. There's plenty of money to be made with spot trading. Derivatives, risky business. I put it out there. You do it. You do you. I'll do me. So look at this, though. I mean, the fact that it went down 99.98%, literally to 0.001. Oh, if I just had a stink bid here, right? And to think that this won't ever happen again, that this is a once in a lifetime event, I got news for you. It's not. This happens in crypto. Every couple of years, we see something like this. And so you had it. Doesn't mean we can't have another one. Doesn't mean there's only one. But the way you prepare for these is, one, always be prepared for a black swan, because there's always one circling the pond. You just never know what the catalyst is going to be that makes it land. Number two, don't use leverage, straight up. Number three, manage your position sizing. Don't go all in on a single position. Don't go all in on a single asset. And unless you're talking like long-term hold, that's one thing. If you're a long-term holder, you don't care, right? I didn't touch my Bitcoin position. All I did was add more. Now, in hindsight, would I have done great to take more profits in that 122 to 126 range? Yes. I took a little, could have taken more, so I could have bought more back. But that's another lesson. Take profits along the way. You guys can't, a lot of people are holding out for that big move. I'm just going to hold out for that big move. Well, guess what? Something like this happens and you may never get that big move again. So take incremental profits along the way. Call it what you want. I call it split profit taking, split TPs. Take profits along the way. You will thank me later. It does. Listen, sometimes you take profits and price continues to go up. That's okay. Nobody ever got poor taking profits. Maybe you missed some of the upside move. That's okay. You took profits. And if you take partial profits, then you have room. You still have more left to take profit as price moves up higher. But if you don't take profits, unrealized gains are just that. You're just as poor as you started with unrealized gains. If you don't take any profits, you don't have any gain. So no leverage, manage position sizing, take profits along the way. Don't trade the narratives, trade the charts. How many times have I said that? I can't even count the times I've said it lifetime, but I promise you I've said it multiple times, probably 3 or 4 times this month alone. And we're only 13 days in. Trade the charts. The charts don't lie. Okay. So you could be on the whatever narrative you want. Doesn't matter. What happens in the charts is what matters. Let's see. November's got lots to add. Trump himself might want prices to go up, but I think he's more of a puppet being used by people around him who are pulling the strings on these manipulations. Just my theory. Probably, probably a good theory. November, um, because I don't really don't think he knows what he's doing. You think we might have until sometime until mid-November to pump the price back because that was the last cycle's peak, and cycle traders will want to get out regardless at around that time. Um, there is a chance of that, and like this whole cascading thing, this liquidation event, and the cascade that followed. Um, once things start going and the levers start getting pulled, the algos pile in, the historical traders pile in, the market makers pile in. So it's like a chain reaction of events that make it worse. And in terms of what might happen in November based on history, right? A lot is programmed based on history. A lot of algos are programmed to that. A lot of traders are conditioned to that. And I would just say this. This is going to sound cliche, but this time is different. Just might be a little different. And so what is different? The difference is we have a crypto-friendly administration. We have a crypto-friendly SEC. We have regulatory framework. We have now a bigger institutional play than ever on both Bitcoin and Ethereum. And to Ethereum's benefit, and to those of us who own some, we have a new financial system that's being built on ETH. And that's not speculative. That's not speculative. That is a fact that banks are building on ETH. And so it is reasonable to expect over time ETH to appreciate. It's reasonable to expect an all-time high for ETH that is above $4,950. And it is reasonable to expect an all-time high for Bitcoin that is above $126,000 or $127,000. It will get there. This game is not for the impatient. It's not going to happen overnight. It could. I mean, look at the downside move that happened overnight. Nothing says the upside move can't happen overnight, but it's not likely to. So there's that. What else? We talked leverage, thin liquidity in some of these altcoin books. That's something you really have to be mindful of. And let me just show you what that looks like. Okay. Because you can see here, Bitcoin, you can see a substantial amount of liquidity in the order book: 31 million, 27 million, 31 million, 27 million, 15 million, 9 million, 12 million, et cetera, et cetera. Let's look at something like Atom that just got annihilated, right? And I'm picking on Atom, but come on, it went to zero. But you can see, so the color scaling here in fire charts is relative to each asset. So white on Bitcoin isn't the same as white on Atom, and yellow, et cetera, et cetera. So let's just look at these levels here, right? The highest volume in this order book, which was long before the dump, was $500,000, $500,000. That's nothing, right? So what was holding it up? 26,000, 62,000, 30,000, 45,000, 65,000. So if you're making a $10,000 trade on an asset like this, there's going to be some slippage. All right. So and obviously if you're making bigger trades, you're going to have slippage. So when you're in smaller in order books with thinner liquidity, you need to adjust your position sizing to be able to accommodate that liquidity without getting destroyed, without having slippage in either direction. So there's that. What else? So I talked about the algos responding. Once price broke key support levels, the algos, the stop loss clusters, the lick hunts, they all piled in. And, then we saw smart money coming in and pulling their bids that may have anticipated this. And that just blasted everybody. And so where did the money go? Well, in times I've shared this with you guys many times as well. In times of uncertainty and times of fear, where does the money go? It goes to stable coins. As you can see, money shot up to stable coins big time, right? Stables went from what a to 7.42 dominance up to a 9.3% dominance in, a couple days. And that the heart of that move was really in one day. So in those times, money goes to stables, money goes to Bitcoin, but money goes to other assets like gold. It goes to other assets like and and I just heard Tom Lee give a great explanation of why gold was appreciating. This is pretty funny. So we know that there's in many instances, at least publicly in the public view, there is a lot of disparity between Bitcoiners, crypto traders, and gold, right? Um, well, gold is appreciating right now, but guess what? Tether has a gold-backed stablecoin, right? So if you can back stables with gold, then guess what? Gold goes up, and that's actually feeding the crypto ecosystem. Sorry, Peter Schiff. It's just the way it is. So we have that, that rotation. So again, the biggest mistakes that people are making: leverage without a buffer. Why would you risk 20x? Why? Why would you do that? You think you're going to get rich quick? Well, just know the greater the risk. Yes, the greater the reward, but the greater the risk. Invalid entry points, buying in anticipation of a breakout rather than waiting for confirmation. Ignoring those structural support levels, and timescapes is your friend, my friends. Timescapes will show you exactly, if you're not good at technical analysis, timescapes will show you where those resistance and support levels are. Oh, look at this. We're seeing some resistance right here at a timescape level. And look at this. We found support here at timescape level. So timescapes is your friend. Chasing momentum into resistance. That was the mistake I made on Litecoin. But again, I got a great entry to dollar cost average it, so I'm okay on that trade. And then lack of an exit plan. We all know the plan when we buy that trade. Oh, this thing's going to go up. We're going to make money, and here's where I'm going to take profit. But did you have an exit strategy? What is your strategy for when price moves against you before you open any trade? You need to know what your exit strategy is in both directions. Simple as that. Let's see. Zloviz and 5K gold or 5K ETH first. I saw a tweet last week that says, what's going to happen first? What's going to happen? Who's going to win the race to 5K, ETH or gold? Well, let's see. ETH has been in it for like 10 years, and gold has been at it for hundreds of years. I think that's not a race. And quite frankly, I don't care who gets there first. 5K. That's $50 away from where ETH is right now. It's insignificant to me whether it hits it today, tomorrow, next month, next week, or in 2026. Doesn't matter. I think the long-term view on ETH is going to be much higher. Simple as that. Hey, Albert. Hey, Keith, appreciate your analysis. What do you think about we're still in the bull market or it's near to over, and how these altcoins can recover from 80% down moves if they can recover at all? Some of them will not recover. Many of them won't. And some of them may fail to exist. I'm not going to lie to you. I have secretly been praying for the vast majority of the alt market to just absolutely evaporate. They serve no purpose other than to take liquidity from real assets and real projects, right? Imagine if So let's take a look at something. Let's look at dominance and market cap. Imagine if Total 3, which is the top 100 altcoins by market cap, excluding Bitcoin, ETH, and stablecoins. All right, it's sitting at $787 billion right now. Imagine if that 787 billion was in Bitcoin and in ETH. Where would we be? Just saying. So in terms of alts, to answer your question, Albert, I think alts are exit liquidity. And I would encourage you, if you got one, if you got a great entry on these dips, if you bought this, I would encourage you to take the money and fucking run. A lot of these things that went 80% drawdowns have already recovered from that depth. But there could be more recovery. And so depending on the asset that you're looking at, right, you look for those opportunities, look for those levels that can give you some clues as to where things are going to go. And in this instance, let me get rid of this and then maybe I can see the rest of the chart. Geez, there's a lot up here. So look for those support levels. What is happening with my chart here? I'm somehow looking at negative numbers for Adam. Okay, so look at what's happening here. Here's one, like, right? What went worse than zero? 99.98%. So this has recovered from that 99% move to the downside. It has recovered how much? Okay, 300,000%. That's a great trade if you could get it. So yes, there's been some crazy moves. That's a great trade if you can get it, by the way. Yes. But what's more important is to look and see what levels are being recovered. Okay. And where do we sit? So what needs to happen here for something that went down 80, 90%, Albert, is it needs to recover some of these key levels. So you're going to see, obviously, we're coming into a fib retracement zone here, which has some resistance built in. This was the bottom before, by the way. Okay, this was the swing low. So we're just trying to get back in above the prior swing low. Okay. So that's the first level. And then level by level, there's going to be a lot of resistance right here, clustered between the 21-day moving average and looks like all the others are actually clustered here as well. Yeah, they are. But especially in this zone right here, so much confluence between the moving averages and these timescape levels. This is our quarterly open down here. This has to get reclaimed. And if it doesn't, right, if you start seeing rejections here, you take the money and run. Can I look at Sol? Yeah, I can look at Sol, and I'm going to have to wrap it after this one because I got to go be a dad. Let's see. Solana. Let's see what Solana did. Solana had big drawdown here, obviously, like so many others, but look where it landed. It landed on the 200-day moving average, which has perfect confluence with this timescape from 2021. I mean, picture perfect to that level. And now reclaim the 100-day moving average, now trying to get it up to this next level timescape. These are the ones that are going to be more critical here, right? So we have our recent Q4 open timescape level, and then our January timescape levels, and then our first week of the open. I mean, there's been some volatility with Solana, so expect more volatility, but obviously pumping up right now. And this is probably one of the few, not probably, this is one of the few alts that I'm still hanging on to. Again, it's one that's being staked. I don't have a huge position in it, but I do think there's some upside potential there because of that ecosystem. So I am in a Solana position, and I didn't touch it again because it's being staked. I'm not adding to it. It's just it's doing all the additions are just coming from staking. Simple as that. So yeah, I think Solana has a chance. You can see it pumping right now. What's going to happen here? My expectation, if it makes it to this level, is we're going to see some resistance first, but then look to see what happens. Do not necessarily react on the first touch. Okay, that's that's my take on Solana. And let's take a quick peek at the order book on Solana and see what liquidity is looking like and what the order flow is looking like on Solana. All right, so you can see there's actually some support down here at that 190 level, about 10 million, which is a lot for this chart. Doesn't necessarily sound like a lot of money, but that's the largest concentration of liquidity in the chart, and that's what's pushing things up right here. So do I trust this? If price comes back down, is this going to hold? If price comes back down here, this is probably going to rug pull. But at the moment, we see buying has resumed. Let's take it into. Oh, and look, that's already gone. So some of this has actually moved up. So they're pushing Solana right now. There you go. I'm going to wrap it right there, guys. I got to run, but I appreciate the engagement on this one, as always, and I appreciate the follows and support. If you haven't done so yet, do me a favor, smash those buttons, hit that like, hit the share. Share this with somebody you know who got wrecked, so hopefully they can learn some ways to avoid that in the future. Or maybe they learn that, hey, they're not cut out for trading and they can, take the money and run. One last one from November. May I ask, when do you think would be the best time to sell Bitcoin and ETH until the end of the year, and or at what levels? Listen. I don't do timing in that manner. I look at price levels, and if you are trading Bitcoin and ETH versus long-term holding, if you're trying to invest for the long game, hard to beat that buy and hold strategy. In terms of when you sell, I would tell you that my targets, and I'm not going to tell you where and when to sell, but I'll tell you what my target has been for Bitcoin. My targets were based on this cup and handle structure, that 122.5 to 125 range is what my target was. So my next target from here is 155. And then for additional targets, I just move up the fib extensions. So if you are trying to, in November, if I remember correctly, you're trying to put your funds into other assets, then that's a good range, quite frankly, to at least take some profits if you haven't done so. All right. Hope that helps. All right, guys. Thanks again. I appreciate the follow and support. Hope this helps you trade smarter. In the meantime, if you want more info on the tools or you want to just talk about this stuff, join our community on Telegram. Links are in the description below. They're also in the profile on the website, on the materialindicators.com website, and on the Material Indicators Twitter page or X page, whatever you want to call it. All right, guys. Thanks again. Have a good one. Hope you can make your money back. And more importantly, I hope you avoid this situation in the future, right? Don't put yourself in these situations. Trade smarter.